Hey everybody, davidskarica here. Happy New Year. Today I'm going to talk about. I think because it is still kind of a holiday week, because with New Year's being on Monday and the beginning of the work year kind of being Tuesday, a lot of a lot of schools don't go back till next week. They don't go back till the 8th. So I think I'm still going to keep this kind of laid back kind of video style for this. So I am going to do, but the members. I was going to do members on Monday, and then I said, you know what, I'll do it Tuesday. Sorry, I just decided, you know what, I'll do it. To see how the first trading day goes. Comment on that. So we're seeing the market down. So that's what we're going to talk about today. There's this thing called the January rule. I used to be really into seasonality. I still go to a site called equityclock.com. They also have an excellent Twitter page. Or X page or whatever it's called, right? So anyhow, they show seasonalities and that sort of thing. But there used to be this book called Stock Trader's Almanac, and it would show you all these seasonal patterns of trading, and that whole sell in May go away. Part of the reason I got out of all my bearish bets, or most of my bearish bets, was because I saw that the market wasn't tanking by the end of October, and I just know the seasonality is usually November and December are strong months, especially when you are already a year that's up year to date. So the January indicator is what I'm talking about today. So the January indicator basically states that as January goes, so goes rest of the year, and actually it also goes for the first 5 trading days. So basically, if usually the first 5 trading days and then the entire month of January are higher, usually the market is higher. 77, it works basically 77% of the time. So usually when January is higher, the market will go up 77% of the time. Now, it's not the hugest indicator in the world because the market is up about 2/3 of the time, historical average. But of course, that trend increases. Now, not every year is a straight line. 1987, the market did finish a few percent higher. But of course, it had a huge January that year. I think it was one of the best Januaries ever. I think it was even up double digits, like 10%. And then if you had bought at the end of January in 1987, you would have been down by the end of the year because of the crash. So, see, like I said, these things are not perfect, but it just shows us. Okay, so we are what can happen. So today we are seeing a kind of little bit of a sell-off in the markets. Nasdaq down over 200 points. Dow's actually flat to slightly up a bit, and the S&P is down. So let's see how the next 5 days goes. I think 5 days go. Sorry. I think a lot of people are taking profits on the big tech stocks today. Because remember, if you sell today, or even if you sold last Friday when there was a bit of a sell-off as well, remember what happens is there's a 2-day clearing for trades. So your capital gains would be deferred, to 2024. You don't have to pay them till it's April 2025. So that's why a lot of people, who are up on Apple or whatever, would just Apple or Amazon or the Magnificent Seven or a tech stock, whatever, would be selling today. So I think that's where the selling pressures come from. And I've seen this before. And then what can happen is after that first day or two, when people are taking those profits, because they can defer those taxes, then the market kind of settles in. So let's see what happens. We have seen the 10-year bond yield spike back up to about 4%, which is interesting. Now, of course, that's still over 1% below where the short end on rates are, and nothing's changed in regards to how how the market sees the Fed playing out here. And as long as oil is hovering in the $70 a barrel area too, also that kind of lessens inflationary pressures. We've seen food inflation come down a bit. So anyhow, it does look like none of that has changed. So the question is, if we do see some kind of recession this year, how does the market react? Does the market react like, okay, this is great, they're going to cut interest rates, or does it react like, oh no, the market's pretty expensive? Higher jobless rates and lower growth means, lower profitability for corporations, and we're going to sell. So we're going to have to see that. Either way, we're so overbought on the market and sentiment has turned. So I could see a short-term correction here at this time. And like I said, I've seen many years. There's this dog in my yard. Welcome to the life and times of living on the island. These people, I got a couple neighbors, you can see their houses, in the distance there. They have these dogs, and it kind of annoys me actually because my cat is kind of getting fat and old, so I don't like the dogs running around my yard and they crap everywhere. So it's not all as it's cracked up to be in paradise, as they say. Anyhow, so to get back with the market, yeah, we could see that. But anyway, I just wanted to show you the January indicator. This is something I used to watch like all the time with markets. It's not perfect, but last year we saw a great January and the year before we saw a pretty rotten January. So I remember 2008, the market started horribly in January. So like can be a warning signal. So let's see how it plays out. I'm still cautiously bullish. I just think the way that and also we're also seeing resistance selling. The S&P is right at 4,800. It's right at the all-time highs. So we probably have some techno, just like we see gold selling off when it hits 2050 to 2100 at the all-time highs. So we do get like robot trades and those type of things, right? So anyhow, you can see the dog right there if you want to look at it. It's a nice looking dog, and I've been to my neighbor's house who own it, so it's a pretty harmless dog. It's just clearing up after dog crap in your yard isn't exactly fun. So everybody take care. I hope you enjoyed this for our lifetime members. We'll have kind of more in depth. I'll talk about the January indicator. I'm going to post a picture of it underneath this video on the website. And everybody take care. Like I said, Happy New Year. This is the first video of the new year. I did one where I kind of went into my whole life story as the sun was rising on New Year's Day. And I was like, I think I'm going to save that one or do a refined version of that one for another time. Because I don't think I wanted to bore people with it either. Everybody take care. Bye.